Hey, this is J.R. St. Julien with the St. Julien Real Estate Group of EXP Realty, and welcome to my San Diego market update for February 2024. Stay tuned. Hey, the new year is off to a fresh start, and as we expected, we saw a rush of those that were sitting on the sidelines that were waiting to buy a home decide to get into the market once those interest rates dropped into 6% at the beginning of the year. And as a result, we've seen demand increase throughout San Diego County, and we saw inventory fall throughout San Diego County. When we ended the year last year, we had just under 6,500 homes on the market available to be sold. And at the end of January, we were sitting right around 2,650. So you can see a lot of those homes got gobbled up just in the month of January. And as a result, just kind of like I mentioned in my last market update, of that higher demand that we saw after the new year, we saw the months of inventory drop from 3.5 months down to 1.5 months, back in line, which kind of what we have been seeing historically for the last couple of years throughout San Diego. So we are still facing an inventory crisis where we don't have enough homes to meet the demand. And because interest rates have come down off their highs in fall or late October of last year, we've seen an increased level of demand coming back into the market. So we're seeing multiple offer situations. Again, we're seeing a little bit of pressure on pricing. The median home price increased from $835,750 back in December of last year to $837,000 in January of this year. So we saw a little bit of pricing pressure, not a ton, but a little bit. But we are seeing a higher level of demand actively in the market. Pending sales increased 27% between December and January, and inventory dropped 60% between December and January. So as you can see, that demand is starting to gobble up what's out there. So likely what's going to happen if these interest rates stay in that 6% range, we're going to start to see increased competition as we get into the spring and summer months. Now, that being said, the CPI numbers did just come in earlier this month, and they were not as good as expected or as hoped for. Forecasts called for CPI, which is the Consumer Price Index, the index that measures inflation, to come in at around 2.9% year over year, and instead it came in at 3.1%, which is consistent with the number that we saw back in December and a little bit less than the number that we saw back in January, which was 3.4%. So as a result of that, we did see mortgage rates start to increase slightly as the 10-year Treasury bond yields increased as the market reacted to those higher than expected CPI numbers. And once we threw in the better than expected job growth numbers that came out earlier this month as well, economists start to revise their thoughts on when the Fed would potentially start to cut interest rates. And those revisions started to get pushed back to late summer, maybe even as late as the fall of this year, as the Fed has made it clear that they are not going to start cutting interest rates. And since the job numbers were better than expected, there's nothing that's going to push them to do so until they start to see inflation coming down to that 2% mark that they're looking for. So inflation's being a little bit sticky. As a result, we saw interest rates pop a little bit from like the low sixes to the high to mid sixes, and in some instances, even like the low sevens. And so once again, we're in that kind of ping-ponging of interest rates now between that 6 and 7% range. So we are going to have to wait and see on how interest rates do start to affect the market. But if history is a lesson, I do believe that we're not going to have enough supply to overwhelm the demand. Therefore, there will be continued competition in the San Diego market and continued appreciation on home prices. All right, so that was a lot of stats and a lot of information that I just gave you. So what does all of that mean? Well, it means, once again, when it comes to interest rates, there's still a lot of volatility, but that being said, we do seem to be capped somewhere between that 6 and 7 and mid 7% range right now. Hopefully that doesn't continue to tick up. If you want to kind of keep tabs on what interest rates are doing, probably the easiest way to kind of keep tabs on that is to watch the 10-year Treasury note and just monitor what it's doing. When we saw the lowest level of interest rates, where we saw FHA and VA rates in that 5.75% range and, conventional loans in the low sixes, the 10-year Treasury yield was around 3.88%. Right now it's sitting around 4.25%, and therefore we have interest rates in the mid to high sixes at the moment. If you kind of keep tabs on what the 10-year Treasury yield is doing, that's an easy way to get a feel for what the mortgage interest rates are likely doing, because usually they follow that 10-year Treasury yield. So that being said, if you are thinking about buying a home with all of this going on, does that mean it's a good time? I do believe it is a good time, and I do believe we will continue to see appreciation. And as we get into the spring and summer season, we will start to see increased competition, which can make it a little bit more difficult, make you have to bid up higher prices in order to get that home that you fall in love with. So if you're thinking about buying a home and you are capable to do so now, I definitely recommend you jumping into the market and trying to get that done as soon as possible, because I only expect the prices to continue to appreciate from here and increase competition as we move further throughout the year, especially once we start to see those interest rates come down with the Fed interest rate cuts that should come at some point in the year, even though it looks like now that won't be until much later this year. And if you're thinking about selling a home, well, now is a great time because we are short on supply and we need your home to fulfill the needs of those that are shopping for homes at this point in time. Right now is a great time to be a seller in this market because you're not competing against a ton of inventory. You're going to be one of the few homes for sale in the market, and most likely that means you should get multiple offers on a home as long as you present it well, you prepare it accordingly, and you price it appropriately. So that being said, if you're thinking about buying or selling, I would love to help you achieve those goals. So please don't hesitate to reach out to me. If you have any specific questions about your particular real estate situation, reach out. Give me a call, shoot me a text, shoot me an email, comment on this video, however you want to do it, shoot me a DM. However you get in touch with me, it really doesn't matter, but definitely get in touch with me. I love to talk real estate, and I'll be happy to talk with you. Again, my name is J.R. St. Julien with the St. Julien Real Estate Group of EXP Realty, and I hope to hear from you soon.